In this video, I want to take you through and talk a little bit about cattle. We're going to talk about beef cattle here, live cattle and feeder cattle in the futures market. And the reason I want to talk about them is because they've been in the news a lot lately as the markets have been taking off and going crazy. I have created a PDF worksheet for you. As you can see, I'll pull it up right here. And it'll give kind of a summary. And I will include this. You can find it attached to your email. So we're going to have this as kind of our guide, what we're going to be talking about here, as we can see the differences in the things that are causing cattle to rise the way they are. Let's go down through this very quickly together, and then we'll go in and do some technical analysis. So we'll look at the fundamental reasons why feeder cattle are rising or on the rise, and we'll then go over and look at the technical side of things and see what the mathematics tell us. And then, of course, we've got TradeMiner Pro. So we're going to pull up TradeMiner. We're going to see what the AI system tells us about feeder cattle. So the first thing is the price of beef cattle is moving higher due to several factors, which I'll explain here in this research. We've got 9 different fundamental factors that are causing the rise of feeder cattle. First one is shrinking cattle supply. The country's cattle inventory is shrinking, and there is shorter supply of cattle due to weather conditions, drought, and high costs of necessities. And then we have supply and demand. There's less cattle available, and yet the willingness to pay for beef is still high. On the other end, the people producing it are seeing record high cattle prices as well, because the processors in the middle that need the beef to get to the restaurants and the stores are really having to fight for that as well. Okay, so we have number 3. This is the third fundamental reason why prices are high. We have high feed costs. The price of corn and soybeans, which are used to feed cattle, is also a factor in beef being more expensive. We have inflation, something we've been fighting, general inflation, which in June climbed to 9.1%. It also contributes to the high price of beef. And then 5 is labor and fuel costs. Labor, fuel, and supply chain issues are also factors that are driving up the price of beef. We have to ask ourselves, is labor price going to ever go down? Probably not. I mean, who gets a decrease in their pay, right? I mean, usually once people start getting paid a certain amount of money, they don't go down in price. We give them raises every year, right? So labor prices, fuel is in short supply because, drill baby drill, and that's been stopped. We're working more on trying to save the environment, and so we're not burning as much fuel, which is to raise cattle, you can't use electric cars. And then supply chain issues. Of course, that's been an issue for some time, getting things that we need. So that's driving the price of beef up. So the question really, in my opinion, is are those are the main 3 factors. Labor, fuel, and supply chain issues. And are those going to be resolved? Now, supply chain issues, maybe they could be resolved a little bit. Those are the things that could probably happen more quickly. Fuel, probably not so much. And then labor, probably not. So we've got labor, fuel, and supply chain issues that are going to keep the price of cattle high. We have drought. Drought conditions in Texas and Midwest states are also impacting the price of beef. Now, we've got a fair amount of good weather or rain through across the country through the winter time, but still, nonetheless, there are some drought issues that are causing these prices, or past drought issues that have caused these prices. Now, remember, cattle are not something that you can just suddenly, turn on a dime and you got a bunch more. You can't just turn on machines. You got to raise cattle, and it takes time for gestation. You got to have babies. You got to raise them. So it's more of a longer-term process. Market forces that have been building for a long time, including devastating droughts, will likely keep hamburger and steak prices steady and relatively expensive. Consumer demand, the big unknown is going to be consumer demand. The beef supply tends to grow and shrink in roughly 10-year cycles. When supply shrinks, consumer prices tend to go up, but with people nervous about the economy, this year's more complicated, which it is. We're going to look over at TradeMiner Pro, and we're going to see that compared to the current market prices. We'll do a little contrast and compare. And the last thing is expansion. The conditions have become positive for some beef cow producers to move towards expansion, which could help increase the supply of cattle. With the cattle prices up as high as they are, I think the cattle ranchers are, they're working to try and raise more cattle because prices are up, and that's a good thing, and that's generally what causes prices to come down. It'll take a cycle or two. It'll take time for that to happen, but when prices go up, then producers produce more of that product. When prices go down, they produce less, and so that's the supply and demand factor of feeder cattle. It's just it's a longer cycle. And so now if we come in and we take a look at the price of feeder cattle, you can see in here that we've gone to the moon. Okay, now this is the daily chart. Now I want to just kind of show you very quickly from a technical standpoint. We've had more than a 3-drive pattern in here. We've had drive 1, drive 2, drive 3, and then we had a reset. Now we're in drive 1, drive 2 again. So you can see we've got multiple Elliott waves in a row, and so multiple 3-drive patterns. There's drive 1, drive 2, and here we are coming into drive 3. We got a reset. We never got the ABC. It never resetted to ABC. And so what we've got is we've now got a new one coming in here with a new 2-drive pattern so far, and the possibility of a 3rd drive coming in here. So this is what we're looking for, is that new high peak up in here. And we got kind of this big pullback here on this Fibonacci projection. So let's come in here with the bulls and bears, and I'm just going to come in very quickly, delete all the drawing tools in here, and take our Fibonacci ruler. And you're going to see that if we take it from the low of this first Fibonacci point, or the low of that drive, and we take our Fibonacci ruler, and again, we're going to do that little trick that I touched in the last newsletter. If you haven't received that, send me an email, and I will send it to you. But this little Fibonacci trick where we take the projection level, we draw the Fibonacci ruler, so the sweet spot is over the top of the bulls and bears yellow bars, which is the neutral zone, right, which is our calculated Fibonacci sweet spot. And so we take the hard ruler, lay it over the top, and it'll give us the projection. And you can see the projection took us right up, and right up out of that yellow sweet spot right into the projection of the Fibonacci ruler. You can see in feeder cattle on the daily chart, this was $6,737 move. So that was a nice move in feeder cattle up out of that yellow zone on the Fibonacci projection. So the question is it going to make another ABC pattern? So that's what we're looking for here, and that's what I'm anticipating, is that we're going to get another ABC pattern. So we're going to take our 1, 2, 3 ABC tool, and this is the technical side of things. Of course, what we just read on that document was the fundamental side of things. So we're going to project, anticipate that based on the fundamentals that we're going to continue with a higher price in feeder cattle, and we're going to see that price is going to go back up again. Now, where is it going to come back and pull back into? We don't know, obviously, right? But we're going to say right around 50 to 60%. So that would give us a nice retracement. If it comes back that far, we'd get a pattern very similar to what we got in this one. This is what I want to see. I want to see that repeated right here. And if we get a repeat of that right there, we can look for a long position and anticipate another rise in price. We'll do another Fibonacci projection with our Fibonacci ruler. We'll go off of here. We'll look for that yellow zone. We'll lay that yellow zone out across there, and we'll anticipate the possibility of seeing prices out in this region here of 252, sometime it looks like around end of July. So that's kind of our projection if this thing holds true to this ABC pattern that we're looking here in feeder cattle. Now, something that we need to do keep in mind is that where is this market at in compared to historical prices? So you can see I've got in here weekly prices. So we're going to come in and look at the weekly market. And the weekly market isn't as telling, although it's telling us, over the long haul, this thing's really been going straight up. But the monthly market is the one that's really telling. And here we're still looking at feeder cattle. We'll drop down and look at live cattle here in just a second. Now remember, the difference between the two, feeder cattle are alive and live cattle are dead. All right, so that's the way you remember the difference between these two. Feeder cattle are the little baby cows that they're raising. They're bringing them in, getting them ready to raise up to the point of slaughter. And then live cattle are dead. They're the ones that are hanging on the rack in the slaughterhouses. So that's live cattle. Live cattle are dead, feeder cattle are alive. So if we come in here and look back on, this is the feeder cattle high, clear back here on October 1st, 2014. So these prices are not unprecedented. And that's something that I wanted to bring to your attention. If we come in here and draw just a horizontal line across here at the peak of 245, 200, you can see that that's right where we're at now. We're up, reaching up, touching that peak. Now, once we hit that peak last time, the market collapsed and gave us a nice little ABC top formation in here. And over the next couple of months, this market came way back down, all the way back down into the lowest region, down in here into 121.97. So you have to keep that in mind too, that this pattern could repeat. We could get a typing formation and we could get a blow off top up here. So it depends on what's going to happen fundamentally and what's going to continue to drive this market. So we need to keep that in mind. Now, that's on a monthly basis. Let's drop down here and take a look at live cattle. So this is live cattle, and we're getting basically the same pattern. If we come in here with our Fibonacci ruler, we're just going to draw that across here. And we're going to take a look. We're going to put that Fibonacci sweet spot right over the top of those yellow bars. And you can see we easily have so far reached that Fibonacci projection off of those yellow bars. So that Fibonacci projection in there on live cattle was about a $2,720 move over about a month's period of time as that market broke up out of there. It's exceeded that Fibonacci projection, of course, and we're way up there into the Fibonacci extensions now. So I'm going to come up here with the 1, 2, 3 tool. We're going to go off this lowest point again. We're just going to mathematically calculate and make a projection. And this thing's up into 130.9 right now, reaching up, approaching 161.8. But 130.9 is the golden ratio to the upside, to the projection side. Remember, 61.8 is the downside. And so 130.9. And those are just probabilities, right? That's what those numbers are. The magic of Fibonacci is just a series of probabilities, and of course, the higher it gets up the label, the lower the probability. That's, the lower numbers are going to be higher probabilities. But 130.9 is considered the golden ratio, which is kind of a high probability point on the extension. So that's where we're at right now. We're right up there playing around with that 130.9% region, and that's where we generally get a blow off and a fall back down, and we catch ourselves. Again, I'm going to be looking for this same kind of a pattern right in here, and I want to see that pattern repeat right in here. And if we go for a third drive high, an Elliott wave pattern, we'll see drive 1, drive 2, and we'll look for drive 3, which then if we come in here to the weekly chart on the live cattle, which you can see here is right up here from the past. This is where we're playing around right now. We can see that if we come in here with our Elliott wave tool on the long-term chart, which is the monthly chart, you can see we've had a nice 3-drive pattern here, drive 1, and then we had the retracement, we've had drive 2, the retracement, and now we're at the top of drive 3. So we're looking for that ABC pattern, and whether that comes down gives us that full ABC over the longer term haul here on the monthly chart is to be seen, but that's what we would anticipate. And then, of course, the drop down and the rally back up, which is what we can see here on the daily chart. We get the drop down, the back up, and it may be just an ABC top formation before we get a blow off. So we might get that ABC and then back down into this sweet spot. So we're going to watch for that. That's what we're looking for in feeder cattle from a technical standpoint. Now let's come over and look at, I call it Chat TMP. So instead of Chat GPT, this is Chat TMP. This is TradeMiner Pro, and as you can see, I've come in here with TradeMiner. Let's bring that full screen so you can see it. And what we're looking at, this is the prompt up here in the left-hand corner, and I'll just read that to you quickly so you can see what we prompted the TradeMiner Pro to do. It says search for trends, and I'm using a symbol of live cattle, and we're using the August contract, and we're going to find trends that have won at least 80% of the time, and we're looking at both longs and shorts, bullish and bearish, and then we're going to list trends that last at least 10 trading days, but no more than 30 trading days, and we're going to find at least 10 years of history. So that was the search that I put in there. That was the prompt for the AI system, and as we come through here, we're just going to remove the same symbol overlapping trade dates on the front month, and then remove the same symbol duplicate start dates, and remove the same symbol overlapping dates. We just don't want a bunch of overlaps. So this has just eliminated those overlaps. You can look at those because they're interesting on occasion if you have the software yourself. But we are looking at the 2023 data set, and we're looking back in time, and you can see I've got highlighted here in blue between June and December. So June 14th to December 4th, you can see somewhere in the 80 percentile, 82, 80, 83%, 85%, 80 percentile, that this market is generally bullish during this time of the year. So we need to keep that in mind, that historically speaking, this has been a very bullish time of the year that we're coming into right now. And with the fundamentals telling us that prices should continue to rise, there is that possibility we can get that third drive on that Elliott wave. And so that's what we'd be looking for in here. We can take it over to the neural network and have it use the indicators that it has access to or that it's been trained on to look at the future and see whether it thinks this year is going to be a replicate of what it's seen and what it's found in previous years. But right now we're still a little bit too close or too far out for it to do much of a calculation for some of these. You can see that 19 days until calculation, 72, 100 days till calculation, 140 days going into calculation on that one for it to give any kind of high probability. Now on here, this one you can see that it's got a low probability. So the confidence level of this thing remaining bullish during this time frame, according to Chat TMP, is relatively low. We don't have a real high confidence level that this market is going to continue to be bullish based on what it's seeing here so far. But of course, it's not able to do a lot of calculations because it's a little bit too far out for it to look at this point. So I want to bring that to your attention, let you see TradeMiner and what it's saying about this time of year. Take a look at the market from a technical and a fundamental point of view. I'll include that PDF in the email. And if you have any questions about feeder cattle and live cattle, let me know.